Is here to help us understand more about giving and as it pertains to appreciated assets. So kind of help us out here. What are we doing with when it comes to our charitable giving?
So most people think about giving to a charity and they write a check or they donate clothes to Goodwill.
Yeah.
What they may not know is they can actually donate stock or mutual funds that they've held in a brokerage account for years that have appreciated in value.
Okay.
And why that could be a tax beneficial way to do that is that appreciation, if you were to sell that stock, it's called a capital taxable gain, and so you would have to pay tax on that. So if you give it away at the appreciated value, and if you're going to donate anyways, that capital gain would not be taxable.
Okay.
In addition to that, whatever the value is of that stock, $500 or $1,000 would also potentially be deductible as well, just like your cash donation would be. Mm-hmm. So many people aren't aware of that.
Yeah.
And it's just a good way to give and then avoid that capital gains tax.
And when we think of donating to charity, like you said, normally we think of like, here's a couple dollars, here's some money, but we never really think of like donating like stocks and other funds in that way.
That's correct. And so if you happen to have held a stock, let's say for 20 years and you bought it for $100 and it's now worth $1,000, that potentially is a $900 gain.
Wow.
And you could avoid tax on that gain by just giving it away as opposed to maybe selling it.
Yeah.
If you would have given that money anyways, and potentially if you had $1,000 you would have given, if you just simply buy that stock back at that new rate, now you've foregone that gain and well, it's up to 20%, so you miss out on $180 worth of taxes you wouldn't have to pay.
Okay, so that's a benefit. So what are QCDs? I know that's kind of a hot word that's thrown around a little bit. Exactly. Yeah. What are the benefits? What does that mean exactly?
So it's a qualified charitable distribution.
Okay.
Okay, so that's what for us we say QCDs, and people say, what does that mean? So
right.
You have to be 70 and a half, which is interesting year, but it used to be tied to that required minimum distribution that Roger talked about last week, which now got raised to 72, but QCDs remained at 70 and a half.
Okay.
So if you have an IRA, for example, and you take money from that IRA, it would be taxable to you because it's a pre-tax money. As opposed to doing it that way, you would then just donate directly from that IRA, and that's called a charitable qualified distribution. What's nice about that is that no longer is considered taxable to you. So you can give that money away to a charity tax-free. And now it has to be a qualified charity, which is a 501c3.
Okay.
So it can't be just any charity that comes across to your house or whatever. You would have to know, like most churches are qualified, American Red Cross is qualified, things like that.
Okay, and Joe, I have to ask you kind of on a personal note. I mean, I don't have a bunch of, stocks and funds to donate, but I do make donations to the Goodwill, and they always bring me this paper, and they say, do you need this for your taxes? And, being our wealth advisor, should I be accepting that? Because I usually turn it down, but I need to know when I take my donations there, what should I do? Yeah,
so that you definitely should take that if you are able to itemize on your tax return your charitable deductions. Now, I don't know if you qualify for itemizations based on the standard deduction now, but if you are, if you give money to your church or to the YMCA or whatever, and then you also give your clothes to the Goodwill, so you certainly would want to keep all those receipts because they potentially could help you and get a tax deduction from having.
I've been turning them down, so you're saying I should keep them. Noted.
Yes.
Noted. I mean, why not, right?
It is a charitable deduction.
Okay.
And it could qualify for a tax deduction,
sure. I kind of just didn't know what it was, and I was just kind of like half scared of it, of like, I guess I don't need this. So then I've turned it down, but it's good to keep. So, okay. All right. Well, if people want some more information about the things we've kind of talked about, we've touched on a little bit, but if they need more information, where do they find you?
Well, our phone number is 517-627-1412, sorry. And then our prepareforretirement.com is our website.
Okay.
All right. Reach out for more.
Yeah, absolutely. Well, Joe, I appreciate you stopping by and giving us those tips today. Thanks for your time.
Thank you.